Friends, in today's video, we will discuss three such large cap funds that have generated the best returns in large cap fund category over a 5-year time period. Large cap funds are those funds which invest in the top 100 companies of the Nifty. As per SEBI directives, large cap mutual funds have to invest a minimum of 80% of the AUM of the fund in large cap stocks. Remaining 20% can be deployed by the fund manager as per his discretion. Among the top 3 funds that have given the best returns in the past 5 years, the number 1 fund is the Nippon India Large Cap Fund, which has given the highest returns in large cap fund category. This fund has given CAGR returns of 3.61%, which is an outstanding return for any large cap category fund. If you had invested rupees 10 lakhs in this fund 5 years ago, your investment would have almost become 4 times, meaning your 10 lakh investment would have increased to around 38.03 lakhs, which is approximately 4 times. So, in a short period of 5 years, this fund has generated such excellent returns, even though it belongs to the large cap fund category, which is known for generating mediocre returns. If we talk about its investment strategy, Nippon India Large Cap Fund follows a quite defensive investment strategy and does not churn its portfolio too much, which is witnessed by the fact its portfolio turnover ratio is only 27%, while the category average portfolio ratio is 188%. This indicates that the fund believes in holding stocks for long term and does not churn its portfolio frequently. Apart from this, Nippon India Large Cap Fund is a highly diversified fund. As against the category average of just 49 shares, this fund holds 72 stocks in its portfolio. This depicts that the fund maintains a highly diversified portfolio, which reduces risk of over-concentration and also brings down the volatility in the NAV of the fund. Further, this is commendable for the fund that despite having a higher portfolio diversification than the category average, it has given the best returns in the category. This shows that the stock selection process of the fund is excellent. The second fund in this list is ICICI Prudential Blue Chip Fund. This fund is also performing very well and holds the number 2 rank in its category over the 5-year time frame. This fund has given CAGR returns of 26.27% in last 5 years. If an investor has invested rupees 10 lakhs in this fund 5 years back, then the investment would have grown to rupees 32.12 lakhs today, which is approximately 3 times. So, if in a 5-year time period an investor is getting 3 times the return, then this is a good return. This is a very reputed and old fund, and this is the reason it enjoys the highest AUM in its large cap fund category, which is at present rupees 68,034 crore. The portfolio turnover ratio of this fund is also very low, which is only at 16%, while the category average is 188%. This depicts that this fund too follows a defensive investment strategy and does very little churning of its portfolio. ICICI Blue Chip Fund is also adequately diversified, holding 67 stocks in its portfolio, while the category average is only at 49. So this fund holds more stocks than the category average, which shows that it believes in high diversification and does not follow a very aggressive investment strategy. Because of this, the risk is reduced for investors of this fund. The third fund in this list is HDFC Large Cap Fund, whose performance is almost equal to that of ICICI Prudential Blue Chip Fund. There is not much difference. However, this fund has generated slightly lesser returns in comparison to ICICI Prudential Blue Chip Fund, and this is why it is at number 3 position in its category. This fund has delivered CAGR returns of 25.78% in the last 5 years, while ICICI Prudential Blue Chip Fund has delivered CAGR returns of 26.27% in the last 5 years. So you can see that the difference is not even a full 1%. It is only a minor difference. So we can say that the performance of both funds is almost the same. Also, in this fund, if you have invested rupees 10 lakhs 5 years ago, your investment would have grown to rupees 31.50 lakhs today, which is around 3 times. In fact, slightly more than 3 times, which is quite a good return over a 5-year time frame for any large cap fund. The portfolio turnover ratio of all three funds in this list is quite low, and this fund also has a low turnover ratio of just 17%, whereas the category average is 188%. The number of shares held by this fund is slightly less compared to the category average. We can say it is almost equal to the category average because the category average is 49 and this fund holds 47 shares, which means that this fund follows a slightly aggressive investment strategy compared to other two funds in the list. As both the other two funds, Nippon India Large Cap Fund and at number 1 and ICICI Prudential Blue Chip Fund at number 2 hold more shares than the category average in their portfolio. But this fund has a slightly more concentrated portfolio. At the end of the video, as a conclusion, let us discuss who should invest in large cap funds and whether one should even invest in them or not. Because one thing is very clear about large cap funds. No matter how good a large cap fund is, they don't deliver as good returns as small cap funds in the long term. So if you want to invest in large cap funds, be mentally prepared for the fact that they will give you lower returns compared to small cap funds over the long term. However, if you are investing for a very short period, such as less than 5 years, that is 3 years or similar short time frames, then you can go with large cap funds because small cap funds tend to be more volatile. And if you invest for 2, 3 years or 4 years, and during that period, if the market goes into a downturn, small cap funds will fall more compared to large caps. And in that case, you may suffer some losses or at least some lower returns. On the other hand, large cap funds are less volatile. If the market falls, large cap funds will also fall, but less compared to small cap funds. In simple terms, because large cap funds have lower volatility risk, therefore they also offer lower returns, whereas small cap funds carry higher volatility risk, but that is why they also provide excellent returns. And if you are a long-term investor, someone who can stay invested for 10 years or more, then this can make a huge difference in your absolute returns.